All right, we have more changes unfolding in global energy markets and in the world of geopolitics. Changes that have just unleashed chaos and volatility throughout energy markets, investment banks updating their price targets and forecasts for the price per barrel of Brent crude and a whole host of other commodities overnight after the state of Iran just invited the U.S. to join a new war in the Middle East, a war officially declared by the state of Israel over the weekend after the calculated, meticulous attack they suffered by Hamas and factions within Palestine, an all-out assault unleashed against Israel, something not seen since 1973's Yom Kippur War, some now calling this even Israel's 9/11, which is clearly not good. We all know what happened after the real 9/11, how quickly war can start and how incredibly difficult it is to put to an end. What this means is that there are two hot wars unfolding right now, both of which involve countries allied to the U.S. Coincidence? Well, maybe not, and we'll look at what and who may really be behind this. Not the fighters on the ground, not their ambitions or goals, but the actors that are calling the shots, the people pulling the strings, and what this could mean for global energy. And the worst case scenario, a scenario that's not all that far-fetched or unlikely at the moment. But before we get started, press the like button and subscribe. It's all I ask in return for making these videos. Helps me out, and I appreciate your support. So a new war, folks. Two hot wars unfolding at the same time in two different parts of the world, both of which have one thing in common. Both are U.S. proxies. Ukraine and now Israel. Both are our allies, Israel being one of the closest allies, great ally, loyal ally, the only democracy in the entire Middle East, and a miracle in and of itself, an economic miracle, surrounded by unfriendly neighbors, some of which want to see them wiped off the map. And we all know what's happening in Ukraine. It's a proxy war. Ukraine fighting Russia for the benefit of U.S. foreign policy. The question, though, is what just transpired in Israel the same thing? Well, it may be, but definitely not to the benefit of the U.S., as there's much more happening, much more than meets the eye, something that comes at the absolute worst possible time for the United States. Look, whenever a war breaks out, you have to look past all the media propaganda and ask yourself what's really happening, beyond the obvious narrative that we're spoon-fed, and ask, who is the real winner in all this? Who stands to gain the most from a hot war breaking out between Israel and Palestine? So many options, so many possibilities. One theory, above all, makes the most sense and is also the most frightening of all the options, one that we'll get to in a minute. But first, realize what's happening right now. The days and weeks that follow any tragedy or the start to a war or conflict have to do with money. Huge piles of money are appropriated through our Congress and likewise through political bodies of our allies, money appropriated in the form of aid. And right now, folks, the powers that be, people in Congress, lobbyists, are all jockeying for their piece of the pie. For example, right now in Washington, something that just last week appeared to be dead on arrival was approving more military funding for Ukraine. It looked like Ukraine was running out of time. McCarthy ousted as Speaker Jim Jordan, the most likely replacement, vowed to not appropriate any new Ukraine military aid. Well, how things change, because one thing's for sure, more Ukraine aid is now all but ensured. The White House now has their leverage. The majority of the Congress, the vast majority, supports Israel. Republicans, the staunchest of supporters. Well, don't be surprised when a funding bill comes to the floor, including both Israeli and Ukrainian aid combined in one single bill, a bill that the majority of Republicans won't dare vote against at this point. Now, that's obviously not the reason that this war happened, but realize this type of thing is happening right now all over the world. People in power lining up to be in the best possible positions as this conflict escalates. And oh, it is escalating, by the way. That part of the world's like a tinderbox waiting to erupt. The risk to escalation is multiples higher than in Ukraine, for example. We already have world leaders lining up and taking sides. And it goes on and on, folks. Sides have been taken, and all it takes now is just the wrong move to spark a massive escalation, something that could have all types of implications for global energy and the economy. Well, Alpine Macro released a note yesterday actually saying what they call actually a a special alert is what they call it last night. Here's what they say are the strategic implications for the oil market, writing this. Short term, the risk means prices should increase in the next few days and weeks. This could be sustained longer term if the conflict deepens or expands. They go on and write, as Israel fights the Palestinian forces, the GCC countries are unlikely to boost oil production and may signal further cuts, especially if Israel's response seems disproportionate. Now, obviously, more cuts mean even higher prices if the war doesn't spread, though, and doesn't escalate. Goldman Sachs forecasts crude rising to $100 a barrel by next year. But worst case scenario, absolute worst case, Alpine writes this, the most extreme scenario involves Israel striking Iran's nuclear facilities. Around a 20% chance, they say, that could happen. This could spike oil prices well north of $150 a barrel. $150 a barrel should Israel strike Iran's nuclear facilities. Seemed a bit far-fetched to me when I was reading it, right? Well, right after I read that last night, the Wall Street Journal reported this. Wait for it. Iran helped plot attack on Israel over several weeks, writing the Islamic Revolutionary Guard Corps gave the final go-ahead last Monday in Beirut. So yeah, does that mean that the chances for the worst-case scenario are still only 20%? I don't know, but one thing's for sure, this has clearly come at the worst possible time for the U.S. We are $34 trillion in debt, folks. Our weapon stockpiles are at all-time lows. Ukraine needs more support than ever right now, support which they're on the verge of losing, and China, Russia, and Iran would love nothing else but to see the U.S. wasting their energy and resources in the Middle East, all while Russia finishes Ukraine off and China sees their opening to take Taiwan. So right now is like the time, folks. If our president falls for the bait, this very well could mean checkmate. All right, that wraps up the news portion of today's video. Now I want to tell you about the sponsor for today's video, which is tied directly to how the United States is going to get us out of dependence on Middle Eastern energy. The company is called Atha Energy. You can see their ticker symbol on the screen. If you've been looking for exposure into the commodities or precious minerals markets, you're going to want to hear about this. By far, the best mining company that I've come across. This company has what Warren Buffett refers to as a moat, a barrier to entry that no other company can replicate or push in on their market share. And you're going to see why in a minute. So Atha Energy, they're a uranium producer, uranium miner, and they aren't based out of Russia or some foreign adversarial country. Instead, they're based right here in North America, based right here in Saskatchewan and Alberta, Canada, in the heart of the Athabasca Basin. And they are in one hell of a position right now. Just wait till you hear about this. I'm going to show you their mining sites in a minute, just how much of the Athabasca Basin they currently own, because it's incredibly important to understand how valuable this is. If you're not aware, uranium is in like a bull market right now. It's been in a bull market for the past few years. You can see it on this chart. Right now, the spot price is $69 per pound. And it's been going up for years, folks. It was around $20 a pound back in 2019. Now it's almost $70 a pound. And if you think that's high, it's nothing compared to where the price of uranium was back during the 2000s. That was like the last bull market. Now, we're going to come back to this in a minute. But first, just for some context, when the United States and our allies put sanctions on Russia last year, they were unparalleled. The most sanctions we've ever put on another country, like ever in history. But in the midst of all of those sanctions, from everything from oil to gas to coal to gold, luxury goods, technology products, anything and everything that we could sanction, we did, except one thing: uranium, right? Precious minerals, certain precious minerals, uranium. They decided to not sanction uranium. And I wonder why. Because the U.S. needs Russian uranium. So, hey, we'll block everything and everything that Russia produces and exports except these precious minerals like uranium. The reason? Because America has virtually no uranium production, folks, so we need it from Russia. By the way, as the largest uranium production operation in the world, which we need here in the West to fuel all of our nuclear power plants, etc. But something recently changed. A small cohort in Congress got together a few months ago, real Russian hawks, and decided to put a bill forward to ban uranium imports from Russia. and it passed. So this is like urgent now, right? The US and Canada, really all the West, need other options, and they're ready to dish out the cash to achieve it. And guess what that means? The Athabasca Basin in Saskatchewan, Canada, the home to Atha Energy, but also happens to be the home to the largest and highest grade uranium deposits in the world. And speaking of nuclear power, if you haven't been paying attention these past few years, nuclear is on its way back into the mainstream after, decades of being just ostracized as the worst form of energy, the riskiest. Well, that's all changed. This is a Pew Research poll published in August showing support for nuclear by both Democrats and Republicans has been growing, now at the highest level in decades, to the chagrin of China, by the way, who would like nothing more but to keep feeding us their cheap windmills and solar panels forever. So nuclear is coming back. There's no denying that. One way or another, it's coming back. And if we want to get away from Russia's hold over the uranium market, we have to get a foothold somewhere here in North America. So enter Atha Energy, a key player in this plan. First, let me show you the basin, the Athabasca Basin. That's why their name is Atha Energy, by the way, Athabasca Basin, Atha Energy. This is the map of the region. What we're looking at is northern Saskatchewan, Canada, and into Alberta. The circular border is the Athabasca Basin, home to the richest and highest grade uranium on the planet. And guess which company has the largest land holdings in this entire region? You guessed it, Atha Energy. Everything you see in light green belongs to Atha Energy. 3.4 million freaking acres, just incredible. The largest land holdings out of any mining company in the basin, by far and away. And it gets even better, folks. The valuation of this land nowadays is so ridiculous. So how is this possible? How does a small new company like this own and control the majority of the most sought after uranium deposits in the world? Well, here's where it gets interesting. The founding members, Matthew Mason and Timothy Young, they've been privately acquiring this land for almost 20 years. Before Atha Energy was even ever established, these two guys, first off, are like loaded right now. Very wealthy. They are prospectors, and they're like known around the basin as like the creme de la creme of uranium mining. So here's what happened. These two guys are known, like I just said, throughout the basin as like the most successful prospectors in the last decade. They're like notorious for their prospecting work. Well, for the last 20 years, right, when nobody wanted to do anything with nuclear after Fukushima and all the terrible stigma around nuclear, this land became worth a fraction of what it is today. But these two prospectors knew that that wouldn't last. They knew how valuable the land really was, so they started buying it up, carefully going around for almost 20 years, staking sites, surveying it, and buying up the best of the sites throughout the entire basin. And fast forward to today, with nuclear on its way back, the value of this land has exploded, and the US government and Canada want domestic uranium production. They want it ASAP. Now, over the years, some of the most successful mining companies in the basin owe their success to these two guys. Many of the successful mines in operation here today were sold by Matthew Mason and Timothy Young to these companies. For example, years ago, sold or staked the land to NextGen Energy and kept 10% of the carried interest. Well, NextGen hit it big on that land, right? You could see it's the dark green land on this map. NextGen Energy is now valued at almost $4 billion, folks. And Matthew Mason and Timothy Young, they still have that 10% stake, which means just from this dark green land that you see, their stake is valued around $400 million. And they did it again with a company called ISO Energy that you see over here, the teal green area, this tiny little area. That's how they made their money. They are now extravagantly wealthy, and they still own all of this other land. All of the light green land that you see is owned by them. 3.4 million freaking acres worth. Well, now they're doing it all over again with Atha Energy, this new company. This time, they don't only own a 10% stake, though, in the company. This time they own 30%, and they're putting all of their land behind them. They are the largest single shareholders in this company, holding a combined 30% of Atha's outstanding shares. Also, the chairman of the company has been buying up shares. Also, the CEO has as well. So where does the company stand right now? Well, the company is public, obviously, now. They raised a ton of capital, and they are now off to the races. They are now in the exploration stage and looking to farm out some of these sites to these other mining companies in the basin to speed up their growth plan. They have a ton of cash on hand and have more exploration potential than any other uranium company in the world. This company with all this land is like the gift that keeps on giving. Realize these other mining companies have these tiny sites, small pockets of land to work with. Alpha Energy has the largest land package of all of them, 3.4 million acres inside the basin. And it's like as early in the process as it can get. All of this just happened. It's a very unique opportunity, folks. So again, this is the company on your screen right now. Check them out if you're interested. Do your own due diligence, your own research. All this is public information. I'll leave the link to their site below if you're interested to do your own research. All right, if you enjoyed this video, got something out of it, press the like button. If you didn't, that's all right too. Either way, I appreciate you watching.